Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk, like always. Lock in, it's time to go beyond the trade.
The information discussed on Beyond the Trade is for educational and entertainment purposes only. Nothing you hear on this podcast should be taken as financial advice. Always do your own research and consult a licensed professional before making any investment decisions.
What an interesting week in the market, Mike.
Yes, sir.
It's been cool. We had a 25 basis point cut. We had quad witching. It was not really a super volatile week, but we had some news going on. A few high volume days to close off the week. What did you think of it?
Yeah, it was. Everybody kind of knew what to expect. I think it would have been a complete shocker if it was anything other than the quarter point. But it was different this time for sure. It even after I think following up the week, it was SPY's at all time highs. It closed on Friday, and we typically see a lot more volatility, I think, after a rate move.
Yeah, this is and like we said last time, it's kind of tough when everybody knows what's coming and everybody kind of expects the same thing. It seems like the only way is down, but then closing stable, pretty much closing flat is what I expected. Everybody knew 25 bips were coming, and then some people were probably going to sell the news, and then people were going to buy the dip, and then it was going to be roughly flat. But it was encouraging to see two upwards days, Thursday, Friday. So I was definitely encouraged to see SPY close at all-time highs.
Yeah, me too. And I think it kind of sets the stage for this coming week to, at least in my mind right now, is to be very cautious, especially on Monday. Let's see what happens when futures open, but it wouldn't surprise me if we start seeing some dips early in the week. It just seems like the market knew where the move was going to go. It's there, and now it's time to adjust again. A lot of data coming out this week for sure.
Yeah, and we'll get into tools that we use and prefer, subscriptions that we like. So stay tuned for that later in the video. But
what do you think?
Now,
Or how are you feeling about this coming week? Are you going to be overly cautious, or
yeah,
are
so
you?
I feel indifferent, sort of. As of right now, an hour and a half after futures have opened, they're down 0.1%, so flat. I think that we're not going to see much volatility. I say that, but then if you go to one of the tools that I use is just Market Watch's economic calendar, and there's plenty of economic calendars out there, but you see there's a bunch of Fed chairs talking every single day. So maybe there's something that one of those Fed folks are going to say that spooks markets a little bit, at least temporarily. But in terms of my long-term positions, I'm thinking that things are getting extended, but not too extended. I tweeted this myself a couple of days ago. I said that the stock market, doesn't go up until the bulls capitulate, and it doesn't go down until the bears capitulate. So in terms of that, I think things are squeezing. You can see it all over the place. Some shorts are just throwing in the towel. Longs are piling in. You're seeing companies like Oklo go up 25% in a day, and apparently they don't even have revenue. I think it's it's difficult to justify some things, but I don't think everything is doing that. I don't know. What's your take, Mike? Mine is that I think there's still plenty of plenty of room left. This rally has legs. That's my take, but we will see dips.
Yeah, I think so too. Some of the options I have that I've been playing for a while. One that I own shares in, as well as HIMS. To me, it's starting to feel a little stale. It's at a range where I don't have a problem putting covered calls out there on the shares I owned at 60 because I think at 60 it makes a big reversal, and it's pretty close to that again. It seems to hit that and bouncing down, but it's getting worn out for me. It's one thing that I've learned is when you play the same play over and over too many times and it starts to get old, be cautious. There's usually a move comes, right? I mean, there's a move coming, whether it's up or down. But with HIMS, it's definitely it has some problems to the downside. United Healthcare was one that I was really hot on, and that was my biggest loser for last week. It didn't really move at all. My options are down on that, and I'll probably cut them early this week if there's not some form of. It's got to give me something to show some life to it. But I just feel a lot of them are. It's hard. I mean, we're at all-time highs. How do you get a level above that? Where do you think it's going to go? It becomes very difficult to predict.
Yep, I agree. I mean, eventually there's going to be a minus 2% candle, and then there's probably going to be another, minus 1% that print, opens somewhere, goes way lower, and then closes about where it opens, and then that's kind of the buy signal, like a hammer candle for those who know the names. That'll happen eventually. As far as UNH, I think UNH probably does need some action down to about 325, maybe 320. So I hate that you're down on that, but it may need a little bit more time before it takes that next step, but it's got to go for that gap fill to around 375.
Right. And
I know that's what you were thinking.
Yeah, exactly. I mean, it's I got into it. Well, you can see that level. Is it 318 or no?
You've got it about
right
320.
321.
Yeah.
That I thought, okay, it's finally going to break, and it did. But of course, you can see where it did for the last several days. It's just a slow downtrend. They need news of some sort, I think, at this point to get it moving. When you see these days prior, back in April, these massive losses where it just dipped down incredibly far, it was hard to not pay attention to it, but it's slow. It's lagging.
Yeah, I mean, there's times of exuberance and there's times of staleness, and I think depending on what industry you're in, obviously that's going to be somewhat news dependent. With me being in, kind of in the AI, that's a silly one, right there. Me kind of being in the AI trade, it went stale after Nvidia's earnings, and then it got boosted by Oracle's earnings. So I mean, there's catalyst everywhere, and I don't know what the particular catalyst was for Oklo. This is a nuclear company, right?
Yeah.
Nuclear infrastructure or something.
So they kind of make miniature nuclear facilities basically, and then there's the other company that I had.
I would not buy Oklo up here.
Yeah, but like
Financial advice.
LTBR actually makes a nuclear fuel, and Oklo uses their fuel, and this goes back to kind of what we touched on last week with data centers. So many areas are taboo on data centers that they're requiring them to have their own power facility on site, and that's what Oklo does. They do these small nuclear power facilities, and LTBR provides fuel to them, and they're small micro plants that can operate in the parking lot of a 500,000 square foot data center. But it's
interesting.
Most cities are turning them down because they don't have the power in the power grid to supply the data center.
Interesting.
But it's a future one. It's definitely they'll be fun in the future, I think.
Yeah,
Obviously, Oklo was fun last week if you were in it.
Yeah. I mean, it's been building a lot. It pretty much went straight up, but Yeah, that's not one that I'm in, but one that I have kind of started taking nibbles on here is FLUT Flutter. This is a trade that I entered last week, and a little bit earlier. I've kind of been adding to it. So Flutter is the parent company of FanDuel, the sports book,
Okay.
and I don't personally. Like, I know people who trade DraftKings. I don't really like the fact that DraftKings was a SPAC. I just stay away from SPACs in general. This was a direct listing. It listed in 2020, or normal IPO that listed in 2024. So it's a pretty new IPO, and it went straight up. Some dips along the way, but it's really I feel like this thing is unknown. I don't even think you can trade options on here, and if you can, the bid ask spread is going to be insanely wide, I would guess. It's not really it's not really a heavy volume trade. Honestly, I wish that their ticker was FAND or something, but nobody, you have to Google who owns FanDuel to discover that it's Flutter, which makes me think not enough people are hearing about it, and I think this is an industry that's going to grow.
Yeah.
And so, I mean, the day that sports betting is legalized in Texas or, a bigger state, or they get licenses anywhere, the stock is going to blow up. And so I planned a dollar cost average into this. I wish I bought some in the low, around 250. I almost bought some around 260. Now I'm liking this dip with the 280 support. I'm liking these buys here. I know it ran into football season, and basketball season is right around the corner. So if you're not going to be a sports bettor, because the house always wins, why don't you just, if you can't beat them, join them?
Yeah, you're right, though. I mean, where I live, we just opened a casino. Well, it's been kind of a temporary casino for about 2 years, but it's been full operating Hard Rock Casino for the last year. And
Okay.
the sports book there is jammed every time you go there.
Really?
So-
Is it only
well-
in person?
No, but the problem is the casino is in Virginia, and it's literally about 50 feet from the Tennessee state line, and Tennessee does not allow sport book. So
Interesting.
everybody's heading there because you can play your bets. So I can't even go online technically and place
place
any
bets.
kind of sport bet. Yeah,
Yeah.
but I can go to the casino 5 miles away and play to my heart's content.
I hate the fact of how popularized gambling has been in society, because I think it only makes society worse. I think, but it's not going away, and I think it's here to stay. And I've used all of the apps, and I think FanDuel is the best one, and they probably have the best audience, or
Okay.
best
Interesting.
customer base. So that's something I plan to continue to add to. Not going to be a barn burner, but it's something to just buy and hold, in my opinion, like a retirement play.
I think what we need to do is as we get to the end of this podcast is put together our list of what was talked about, and we'll start uploading updates on those to the Beyond the Trade X account
Yep.
throughout the week.
Go follow.
Go follow.
So we can all be in this together.
Sharing the wins and losses, that's what it's about.
Did you have, and obviously I'm still in Applied Digital and CoreWeave. I'm watching those go up, which is awesome. Those went up 5% the day after our podcast aired. They must have heard that I was in them. Did you have any other trades you wanted to talk about, Acro?
Mine were all, I did very few new trades. I did get into Boeing early, which did okay. In and out of that one, it was a quick trade. But again, it was catching the dip.
Kind of looks a lot like Flutter.
There were-
On
it was in here Wednesday, Thursday. Got back out of it, thankfully, before Friday, because Friday was back down. But
yeah,
quick, easy
You know,
trade.
on-
And then, of course, on the Fed, I got into SPY. more of a Deegan play than anything. You see those big giant candles, and the market hates big candles. I'll say it. When you get a giant candle, I don't care if it's up or down, the market hates it, and more times than not, a big reversal follows. So I got into SPY when it took the big red candle. I almost caught the bottom, and I bought options there for the following Friday, for this coming Friday, and bought in at 260 and sold at 5. So
Wow,
pretty nice.
nice.
Yeah.
Nice.
And all in 20 minutes, I made my day, made my week, really.
Do you want to go through that entry?
Let me bring it up.
If you remember, just go to SPY, break it down to like the 3-minute chart. And Acro, on TradingView, you can literally you don't have to click the top left corner. You can literally just type the letters of the ticker, and it'll pull up. And type the letters, hit enter.
Okay.
Yeah, show us and tell us what you saw.
I think this is it here, right? Thursday?
Nah, one more day back. There you go.
Wednesday, here we go. So on the time frame, obviously 2 o'clock Eastern time, and then this happens. So I got in somewhere in here, which was
About
657, 658.
Okay.
But it came all the way down from 661 plus. Did this one early, right? So this was a smaller play, but this was the big one here at 250. So right after Powell has been talking for a little bit.
Oh,
It's
wow.
like-
That's like the bottom.
Yeah. So I ran this one, and once you get, at 100 and I think it ended up at 120%. I'm out.
Yeah.
I think I kept 2 runners till the next day that ended up going a little bit higher. But
Yeah.
again, the market hates big red candles. This whole move is typical of Fed Day. I mean, we knew it was coming. Oh, there's the little boost right before the announcement, or when the announcement comes out, and then just straight down. It bounces around, and then the big dump. And there was no reason at all for that big of a dump.
Yep. And if you zoom out, actually, no, this doesn't necessarily show on the daily, but it almost that level that it bounced off of, which is about 654 ish, is the top pretty much from Wednesday, September 10th. So a week prior. If you look at those candles, if you go out to the hourly chart, or the hourly chart is fine, and then just zoom out super far. Basically, there was So what I would probably have seen there is you're seeing this candle from the 17th. You're seeing it go all the way down to 654, 655, which was the top on the 10th. To zoom out a tiny bit more.
So you're there at
Yeah, right there. And you see that candle you see that wick on the far right.
Yep.
On the 17th. It hits really right at about that same space. So that's kind of the support play there. I assume you were going for.
Yep, and you see the dashed line that I have on my chart. That's giving me high lows of the day, the week, the month. So that was the low of the month,
Yep. Okay.
where that dashed line is at the bottom of that wick.
Cool. All right. What are you looking for this week?
I'm going to be, one that I hate seeing where it's at, because I think it's way underpriced right now. We talked about this a month or two ago. Target had another
Let's hear it.
massive drop.
Oh, I did hear about this. Do you know why? 88
Nothing
bucks.
Yeah.
They're getting beat by Walmart.
Well, there's a lot of speculation that the holiday inventory has already arrived, and everybody is expecting a very flat holiday season. So I think all of them will see some drop. Walmart and Costco, Sam, all of them will fall into this low retail sales for the Christmas season. I don't know how true that is. I mean, it seems to me everybody's spending more money than they ever have. You go to any
we're
of the
coming
malls
up
around
on-
here, they're packed.
Yeah, this is not a good looking chart. I mean, the weekly is just brutal. This does not look good. I mean, I think support could maybe come around 85, which would be highs from July of 2015.
Right, well, look at this. I think when I looked at it earlier, these numbers haven't been here since 2019.
Yeah, yeah,
So there
not.
it is.
I mean, it's a brutal looking chart. Somebody's going to get paid on this, right? Somebody's going to make money. It looks like your longer term support is probably in the 85 range. But what are you seeing here for this week?
I'm looking at it from that 87, 86, 87, where it's sitting right now. That was a big level of resistance back in 2019. I mean, Target's had it's taken its hits for sure with some of the controversies and the clothing that they put out and stuff like that, and people trying to protest it. But I mean, where it's at right now, it's to me it's extremely undervalued. For a long time play, I would be looking at that and very well may, but options I would probably stay away from it.
Gotcha.
But yeah, I think it's anything under 100 on Target is kind of silly to me. But
Yeah. And then you look at Walmart and Costco, and they're at, all-time highs
Yeah.
or close, not all-time highs, but fairly close. What else are you seeing?
that's about it. There's not been, because of the last week being a Fed week, the moves to me have been a little bit smaller. What I typically do is like on a night like tonight, Sunday night, getting into the beginning of the week, I'll go through my entire list that I have here on the side, and this is one of them. There's another one that I'll flip through, but I look at all the stocks that I quote unquote follow, see who are the gainers, losers. If there's been a big move one way or the other, I start keying in on those and then do more research as to why it went up, why it went down, and I start targeting those. So if it was a huge gainer, like, we mentioned it, let's go to ARC.
Yeah, explosive.
I mean, I'm interested in shorting ARC. It's just Kathy Woods never seems to get it right, and to see it up here in this big giant move, I'm thinking ARC is due for a little bit of a correction. So I'll watch it tomorrow at open and see where it's at, and if it looks like it's getting some pressure down, I'll probably buy some puts on it.
Hey, well, she gets it right once every 5 years is kind of the thing.
Yeah.
I mean, she owns a bunch of tech companies that are highly dependent on borrowing money, and so when interest rates go down, they go up. One that I'm watching is kind of an interest rate play is BLND, Blend Labs. They are one that, so they're a $4 stock right now. If you go out to the weekly, you see big resistance there at 450. But it's basically, this was an IPO back in 2021. Kind of talked about IPOs last time. And this one just suffered from the fact that interest rates were really high. And this is a play, it's hard for me to explain what they do, but it's basically interest rates go down, this goes up. They help with loan origination, mortgage originations. They're a tech platform for originating debt. You can think of it like that.
Okay.
So basically, it's interest rates go down, this goes up, and so you see. So they had a dip off of earnings. You can see back in August they had a dip, like a 30% dip. And I've been following this stock for a while. Dipped because their CFO left, but then a board of directors left or something, the director. But one of their big investors put their guy in. So it was kind of everybody panicked, but it's really not that big of a deal. And you see how it ripped, actually squeezed whatever shorts were in there, ripped back up into recent highs, highs of the year, highs of 2025. So this one is one that I'm watching for a drop down to 370s. That the top of that candle from August 22nd and August 5th, really around low 380s, high 370s, is kind of that what used to be resistance and is now, I believe, going to be support. So I would definitely look to add there. And if you're adding at 380, your upside is up to recent highs from highs not seen since 4 days ago is 20%. So up to 450 from 380 is 20%. That could be a really quick
Interesting.
change in your pocket. Like, I don't think this is going to go back below whatever that support there, 340. If it goes from 380 to 340, I would be very surprised. This just made highs for the year. I don't know if it's 52-week highs, but this is one that I'm certainly looking to buy with immediate upside. In my opinion, not financial advice, my opinion only. Obviously, the future for interest rates are a little bit murky right now. People kind of gathered from that Fed meeting that that we're expecting to have 3 cuts this year, but the amount of cuts next year may be less than we anticipated. So this one would suffer if that materializes. But in any rate, this
Yeah,
did.
I mean, and that makes sense, right? I mean, if we get 2 more quarter point cuts this year, that I think that takes care of the first half of next year as well. Unless there's some massive economical change.
I mean, by the end of this year, I'm looking at FedWatch. They're expecting 2 more 25 basis point cuts, so
another
0.5%. And then by the end of next year, what's priced in is, well, it's between 3%, 3 to 3.25 and 2.75 to 3. So that would be an additional, let's just call it 3. That would be like only 2 more cuts for all of next year.
Right.
But
that gets us down to a rate that where it should be, or where it seems to be most comfortable anyway.
When you go look, the dot plot showed, the neutral rate they all have at about 3 and change. It's going to be about that 2.75 to 3 to 3 to 3.25 range is kind of what everybody thinks.
And with that, what do you think? What do you expect mortgages to be at? Low 5s?
Oh, I don't. I'm no professional. Those don't even the Fed interest rate, Fed funds rate goes down. That doesn't necessarily mean mortgage rates go down, and that's out of my lane. Okay. But I mean, another one to watch is Rocket, RKT, Rocket Mortgage. A more well-known one. I think Blend is kind of one that's in the dark that not many people know about. Rocket has seen worse days. It also has some squeeze potential. I don't hate Rocket. I'm not probably going to buy it. I think for a longer term play, I look at Blend. But another one that you might see some squeeze in and has seen a lot of recent volume is UWMC, United Wholesale Mortgage. All these interest rate plays. Again, this isn't exactly my lane, but it's something that you can't ignore.
No, but I think housing, for my industry, housing is holding up a lot. And what we're seeing now in market moves, if housing was going strong, the market would be so much higher right now.
And that's
so much higher.
I know a good amount about self-storage too. And if you look at companies like EXR, Extra Space, they're a REIT, so any REIT is going to benefit from lower interest rates, as is any real estate. They had a nice pop up to 150, but these you can see. I mean, these storage, Extra Space, CubeSmart, Public Storage, they're all going to be in a downtrend really until housing
Yeah.
starts to pick up, until people start to move.
There's some impressive numbers on the shortage of new housing, which is such a big indicator on so many things. I mean, and people a lot of times don't think about it, but I mean, even from aggregate mining for concrete foundations, the timber industry, insulation, everything that goes into a home, and we are something like at a deficit of like 1 million. I want to say, and don't quote me on that, 1 million a month, 800,000 a month below where it should be for new housing.
So that
starts.
means less
That's
houses
huge.
are being built.
Exactly. And then once that number starts coming up, these other industries will start following. It's a pretty big indicator for my end of things, the mining and materials end of products. So, I mean, think of it: kitchen cabinets, appliances, tile, hardwood flooring, the timber for your house, concrete for driveways and foundations. All of it is right now at such a low that, for example, mining, if there's not road work going on, there's not a lot of sand and gravel being produced.
Yeah.
But when the housing market takes off, sand and gravel picks up.
I mean, there's a shortage of housing, which means that housing buying homes is more expensive anyways. We have higher mortgage rates, right? At what point does when does that curve start to have an inflection point where everything starts to get cheaper and everybody feels a little bit more comfortable? I don't know.
Yeah, I mean,
but
it's a spaghetti bowl. I mean, there's nothing aligned at all. It's just spaghetti in a bowl at this point.
yeah,
And love him or hate him, we got 3 more years of Trump. What's his legacy going to be? Is it going to be with all this talk of Freddie Mac and Fannie Mae IPOing, and him coming up with some special mortgage program for first-time home buyers? I mean, I think that would be awesome. I don't know what it looks like, but if they were able to come up with some special low-rate program, you would have to qualify, but it gets people into houses. Well, that's great, but there's no houses available.
yeah.
So,
Yeah.
I mean, something's got to give there, but I mean, I think that's what I'm watching, especially with the Freddie Mac stock. Is I own a bunch of shares of it, but it's done okay. It
I
had
think
a
we
big
talked
run.
about that last time, right?
We did, yeah. It had a big run, then it kind of flattened out this last week.
Yeah.
But it's a driving force. If people want to buy houses and there's none available, well, somebody's going to have to start building houses. I mean,
Yeah.
the population is not shrinking. People that want to get a house is growing, so it's going to got to come. Something's got to give. That's just a weird one to kind of going off on a tangent there, but something I'm watching because I think it'd have a big effect on many stocks moving forward.
Yeah, that's why we're talking about it. And you have to think, some things like industries that are very much struggling, storage, other industries, that are interest rate sensitive. I mean, you got to think that some of these are bottomed in one way or another, and maybe you're buying that bottom, but obviously you have to be pretty calculated about that.
Yeah.
Next, I kind of wanted to talk about the tools that we use on a daily basis. I know we use different ones. Mike, what are your go-tos on your Swiss Army knife of tools?
So I'm kind of stuck I trade off of E-Trade. I don't use E-Trade Pro or whatever it is. I use their, what do they call it? So there's the standard E-Trade, but they do have a Pro that's very much more like TradingView and gives you a lot more stuff. I don't bother with that, but I use TradingView on the side. That's my primary charting program. But when it comes to how do I find my stocks, I like FinViz a lot. FinViz is you can use it free. Let me see if I can pull that one up here.
Yeah, and that's FINVIZ.
Yeah, so that's FinViz. That's their homepage. FINVIZ.com. I actually pay for it because it gives you some added benefits when it comes into the screener and being able to save your platforms or not platforms, but your presets for screeners. I can go in here and do swing trades. And all of these parameters that it gives you, and I'm sorry for the people that are listening and not watching, but I mean, there's probably 70 different parameters you can set. And at the very bottom, it'll show you the stocks that meet that parameter. But what I really like about it for the free portion of it is at the home screen, you can go down and it gives you economic data for the day. So every morning, if you log in there and look at it, it tells you what's today. Is it CPI? Is it Feds? Who's talking when? Bond auctions. It's all listed there, and it gives you. You don't see it today because it's a Sunday and there's nothing going on, but it'll typically show you. Well, here it is, bringing it up. I guess this week coming up. The impact, it shows you from a 1 bar yellow, 2 bar orange, all the way up to red. Like there's a red one, 830 retail sales month over month for Tuesday. So it gives you an indicator of how important they are as far as the way the market's going to see the data. And it shows you the data, and it's in there for every day. When you log into that main screen in the morning, it gives you today's, and you can spread it out to see the whole week. That gives me the data that I need to know what time should I be looking to maybe not be trading something.
What are the other red impact ones for this week, and when are they?
So on Tuesday you have retail sales month over month.
All right.
And you get into Wednesday, we have housing starts, we just talked about, building permits.
Also at 8:30.
8:30 in the morning.
Oh wait, this was last week. This is last week.
This is last. Oh yeah, 17th. Sorry.
Next week.
Next week. So existing home sales on Tuesday at 10 o'clock. And then Fed Chair Powell talking at 12:35 on Tuesday.
Oh my goodness, not again! Actually, he pumps the market. 12:30. Everybody, be careful.
Then we move to Thursday. GDP growth rate.
Big. That's big.
And durable goods.
Durable
orders.
goods. Thursday also, and then
existing home sales.
Yep.
Then we go into Friday. Personal income month over month. I don't know how big that one is. Maybe depends on what market you're trading in, but personal spending, core PCE.
PCE is going to be a big one, folks. This week, the PCE is the Fed's preferred measure of inflation. Obviously, you have CPI, which is Consumer Price Index, PPI, which is Producer Price Index, and then PCE, which I don't know what PCE actually stands for. I should probably Google it. But PCE is what they prefer. They just all calculate them differently, and they like that one. So the anticipated forecast, the median forecast year over year for PCE is 2.7%. We need that number to be lower. But you obviously have to look at what last year's was compared to, now, because maybe you'll have a tough comp if last year's increase in August. I guess this is going to be August data.
Yep.
If last year's was low, then maybe our 2.7 isn't as bad as it may seem, and we've kind of seen that the last couple of months. But we need that number to eat closer to 2, or else we're not going to get many more cuts. So
yeah, and if you look at that on the screen, the core PCE, the prior was 3%, expected is 2%.
Yeah, those must be rounding. But so the one that I use Market Watch uh, economic calendar. This honestly, I should probably use Finviz. This is really nice. But yeah, I just type. You could Google Market
Yeah.
Watch Econ calendar, and this is what I'm scrolling through right now. Another thing that I use regularly is the CME Fed Watch. So CME, the trading group, and then Fed Watch. That will show you the interest rate futures for the Fed funds rate, so you can kind of get an idea of where we're headed. You can see month over month changes in where these predictions have been. Week, over the week, where have they changed, and since the last day, where have they changed? And you can look at every Fed meeting out for out until 2027. So
We should add these links to the description part of the video on the YouTube upload.
yep, good point. Good point. We'll make sure that we do that for y'all. Yeah. So I use that. Those are kind of my two main things. I'll look at the forward curve on Chatham Financial every now and then. I'll look at an earnings release calendar if I'm just trying to track upcoming earnings releases. I like Nasdaq.com for that. Um, those are kind of my main tools. Obviously, I'm a Trading View long time lover. Trading View is the best.
Trading View is
But
awesome.
Trading View. This needs to be Beyond the Trade, sponsored by Trading View.
There you go.
Love Trading View. I've used several different flow providers. I love Unusual Whales. Need to get back into using it more.
And with TradingView, they use the Pine editor, and you can create your own
Scripts.
scripts for it. And we have actually somebody from the old group who helped me out, Adrian. And one
Yeah.
of the main ones I use is RSI. And if you look at, let me go back to it. I'm lost here now. Where am I? Here I am. Screen.
We're getting a lot better at this.
Yeah, it's coming around.
There you go. This is a lot cleaner, smoother.
But if you look down at the bottom, this is the one I have open all the time. This is RSI, Relative Strength Index. And something I learned with my son also trades, and he was not getting the same data I was. What we found out is you have to have aftermarket, pre-market turned on for it to be accurate, especially early in the morning. But I look at RSI, it's like, it'd be nice. I want to have a red line, a green line, and when it dips below, I want the chart to turn green. So if you look at this, again, sorry for those that are listening and not watching, but as soon
You're
as
describing it
the
good.
RSI goes down below this green line, which is 30 RSI, it lights up green. So if I'm scanning it on my screen, I see that it sticks out to me, and I start looking at it. This is what EXR. Right now, to me, this is in a buy situation
On the 5 minute.
and that's the only thing I use for RSI on day trading. 5 minute
Okay.
chart. It dipped below the bottom RSI of 30, which is the borderline. Anything below that is indicating it's extremely oversold. Anything above the red line is it's been overbought. The key to this is do not buy until it breaks back above the 30. It could keep going down and down and down, but when it breaks back above the 30, it is now back in the range. That's when you want to buy. So we'll see what happens to this at open. If it's continuing to go down, now there's some time in between there, obviously, but as soon as it breaks back up is a buy indicator. When it goes over the top, you wait for it to come back down, and once a candle closes below the red line, that's my key indicator to get in. I mean, it's crazy scary how often this works.
When is your I know it does because you tell me every time it does, and I love that.
Let's look
when
at
is
SPY
your-
here. This is SPY on Friday. Look, you notice it broke the red line, so it broke over to 70. 70 and 30 are the two main numbers you want to look at in RSI. Anything above 70 is overbought, overbought. Anything below 30 is oversold. SPY dumps, but notice it when did it actually close a candle back below the red line? Right there. And look what happened to it. You'd have got in here and you'd have had this entire play. That's a huge move.
Granted,
And
that
look-
is after hours.
Yeah. But now look at it this is after hours. This was during the day, Friday, right? Yeah.
No. That was after hours. You see the blue highlighting?
No, this is after hours Thursday.
Yeah,
Or
yeah.
Friday, I'm sorry.
That's pre-market.
This is after
Blue is
hours.
Blue is after. Yeah, blue is after hours. Yellow is pre-market.
I don't have it turned on here. My highlights. Hang on.
No, you see it. It's there.
I can't see it. I'm old. I'm an old man. Oh wait, there it is. All right,
Yeah.
I need to turn the shading up.
Oh, that's funny. When is your indicator to get out? Say you get a false alarm on that RSI trade, and then say it's going against you. Like, I mean, you can scroll back and probably find an example of a false
I
alarm.
would go again. What I talked about last week is I'm pretty much a 20% guy, so I may ride it to 20% down. If it's one candle, let me try to find one here.
This is a weird week to be looking at this. So,
Yeah.
but I mean, yeah, you could have got it right there on the Fed. You could, if you saw it above 70, like go to the Fed, go to the right. Yeah, you see it broke above 70 there in the afternoon on the first push, and if you would have shorted that, you would have done great.
Yeah.
Right?
And
I mean,
a lot of thing to keep notice of is between the lines. So it broke, and yeah, that would have been a good entry to short, but it was so fast of a move, that's almost impossible. But look what happens.
Yeah.
It didn't break, but it came right back down to the bottom. And completely reversed on the next candle.
So you barely miss it.
Yep.
Interesting.
But, I mean, these are the ones that I know what it is. My monitor's not turned at me. There we go. So here's this one's a good example of what not to do. So this one broke back down early in the morning, and it completely reversed again. So I would have been out right there. That would have been a loss. And then nothing else breaks the rest of the day. So that was just a chop day, kind of garbage day. This one, and not until the end of the day.
That's a good one there too. That was a good one for a short
Yeah.
right there at the end of the day, right there.
Yep.
So both of those would have hit.
Right. So here it would have, you broke that candle, which is a small candle. Let me try to expand that up some. So here it broke over. Here it came back, but then it bounced back up, but then did a complete reversal again. So even if you got in here, this would have not caught me out of my 20%. I would have still been in. Mm-hmm. And then it all of a sudden, perfect reversal all the way back down.
Yeah. And
where
honestly,
does it go? It goes right to the bottom of the RSI at 30 again.
Yep. And then
30
bounces
and
right
70
back
are
up.
magic. But the key to
And-
this was I struggled with it for a long time, and I don't remember who it was that did the video. But his point was, when do you use RSI? And it was, do not get in until a candle closes back in range, meaning between the 70 and the 30. If it broke, I'm going to get in. Well, you can get in here because it broke, and you're going to get you're probably going to get damaged on a trade like that one because it never had a candle that closed back under. And even here, yes, the RSI starts fading because, again, time is working against you on this. It's staying up there, so the RSI is going to start coming down. It's relative strength. It's fading, but the stock is staying the same and maybe a slightly uptrend. It's the bigger moves that you want to look for. Here at open would have been another great one. Look, I mean, it's below, boom, you could have played that all day. So, I don't know. It's hard to – it's my number one indicator that I use, period.
Cool.
5-minute
Perfect.
candle. Make sure the after-hour session's turned on. Set your 70 and 30 and wait for something to break out and then break back. On Thinkorswim, which I also use, Adrian, also the guy from our from the league, helped me write a script for that. That I have a side window. I don't have it open now, but the side window on the far left. Anytime something breaks out, it pops that ticker in there for me. When it breaks back, it pops it in the window below. So I just glance at the left and see, okay, there's 8 stocks that just broke RSI to the upside, and here's 4 that just broke back in, so I can quickly go look at them. A lot of them are stocks that I don't necessarily trade. It gives you every stock. So if it's something I'm following that I'm interested in, it's perfect to go swing over and take a look at it. But that's my number one thing is RSI.
Yeah, for me, the only exit I'm potentially watching is if you want to go to the daily on CoreWeave Acro. I've been in this trade since the 90s. My average is probably high 90s. This is kind of an example of exiting potentially a winner. I'm not looking to fully exit. I'm CRWV. I'm looking to maybe take some profit, and you can head out to the daily. I'm looking to potentially take some profit, and for me, the risk is below a key level, which for me, the key, I mean, it looks great. It's following all of its moving averages. It's got great volume. I mean, it seems to be heading in the right direction, but for me, a close under 114 is kind of where I'm drawing the line. 114, the bottom of the wick a couple of days ago, that's where I would kind of draw my line to start taking a little bit of profit. About 114, 115. I just want to be smart about this one. Some group announced that they're doing a short report on this. A lot of people think the company is a fraud. I think that is, everybody thought NVIDIA was a fraud. People shorted NVIDIA. Same thing about Tesla. Now, I'm not saying CoreWeave is NVIDIA and Tesla, but I'm saying that, everybody doubts companies that are successful and have high ambitions. So I think in the grand scheme of things, with especially what you talked about last time, Mike, Acro, I think, this maybe this is a hot take, maybe it's not, but I think that these companies are quickly rushing to do all these data centers because they know that eventually governments are going to crack down on them, and then there's going to be a shortage of them. So I think the rush for all this capex and all this spending, which you see a company like CoreWeave is kind of spending a lot and taking on a lot of debt, but you see, Microsoft, Meta, all these companies are building data centers all over the place as fast as they can because they're Applied Digital, which is my top holding. They're building all these data centers right now and rushing them out. And just like you talked about last time, these jurisdictions don't necessarily want them because there's going to become a power issue, right? Mm-hmm. They're going to be taking up too much power. And every single day, I see more stories about how data centers are bad. They're taking too much power. And there's going to be a shortage of them, which is going to increase the price of AI as a service, which is what CoreWeave does. And then, the rent that you can get for owning a high performance computing data center, which is what Applied Digital does, and NVIDIA is a huge part of this. So maybe it hurts the demand for NVIDIA. Honestly, in the future, there's something to think about there. But we really need to watch how these governments regulate these data centers, because I think in the coming years it's going to be more aggressive. And then the other thing I want to say is I think we're in the 4th inning. I think we're super early, maybe the 4th to 5th inning. I think we're early. I think there's a lot left in this. I think all the people complaining and all the bears that are saying, I'm out, I'm shorting this, I think that they are probably going to wish that they held what they had. Because I think when people are in a rush to short something, it's not the top yet. When people are trying to call the top, it's not the top yet. Whenever people completely give up and say, SPY's just going to go up forever, like it's never going to go down. Okay, it looks like that, yes, but there are too many people eager to short right now, which makes me think we are not even close to the top.
Yeah, I would agree. It's I mean, AI, the whole, what it's driving right now, there's so much demand for data centers. It's, I mean, and it's, somebody, I think what it was, with this Nano Banana app that's out on Google AI.
Google, yeah.
You can take a picture and it is almost instant what it does to it. I took a picture of me and my girlfriend with a background. I don't even remember what it was, but I said, make it look like we're at a Bears game, Chicago Bears game. And I mean, it inserted Soldiers Field in the background and did it all in 3 seconds, and it looked realistic. I'm like, oh, wait a minute, put us in Bears jerseys. Next thing you know, we're in Bears jerseys, and there is nothing in that image that indicates it's AI. It looks so realistic, but that demand is going to be so high, and the amount of computing power that's needed and electricity to run it is going to be, it's intense. But my point with that Nano Banana is that's the worst it will ever be, and it was out for like a month. Next week, it's better than it was last week. A year from now, it's going to be 12 times better than it was, a year ago. So none of these AI apps are getting worse. They're only getting better. And it's demanding more and more power, more data centers, more computing power. So it's not going anywhere.
Y'all know where I am. Y'all know where I'm heavy, and I am not hesitant at all to sell. I mean, when you're in the green, man has never gone broke taking profits, right?
That's right.
When you're up, 100% on something and then 30% on another, and they're a couple of your biggest holdings, you gotta know when to kind of cycle out. And I don't want to pay taxes on them right now, but I still got to do what the chart's telling you. You don't tell the chart, hey, I'm gonna close this position when I'm up 100% exactly. Okay, well the chart will make sure that you never get that, and then you regret it, right? That's exactly how it works every time. So the chart tells you what to do. You do not tell the chart. You're always going to be wrong.
Exactly. It's funny because that was my hot topic notes were data centers and mini nuke plants.
Well, we've kind of covered both of those, huh?
Yeah, we wore that one out. Wore it out.
Many nuke plants. I mean, maybe we're gonna get to a day in this podcast where I'm not talking about data centers, but I just dared the amount. They're just not going anywhere. They're not going anywhere,
Nope.
And people are trying to call the top on the data center market. Actually, they're really not. In a way, I've heard some kind of people say, "Oh, we've got too many of them," But I think there's just going to become a shortage. I think there's just going to become a shortage because people don't want them, and then the people who do have them are going to get rich. So
technology is moving faster than most people realize, and that's probably the understatement of the year. I've told this story before to some friends when, again, I'm 61 years old. I used to sell insurance when I was in my early 20s, and we had to buy a computer. Our insurance company, our firm, demanded that each agent had to have their own IBM computer. And I had to finance this thing for 4 years to afford it, right? So I bought an IBM desktop, and the big upgrade was a 5 megabyte monster drive.
Ooh.
At the tone of $1,000 for a 5 megabyte hard drive. And at that time, now this goes back again, so 40 years ago, they said you will never in your lifetime fill up a 5 megabyte hard drive. Well, I have photos on my camera that are 10 times that size. Today,
Boy, were they wrong. Boy, were they wrong.
But again, 40 years ago, how fast it changes is mind-boggling. I mean, in my lifetime, I saw microwave ovens become a thing. Cell phones. I remember my first mobile phone was hard-mounted into my car. Then the bag phones came out. Guys on the golf course with their bag phone. Yeah, this is Don. Yeah, dude, you're up. Let's go. Now it's what you have in your pocket is more powerful than every computer that was out back then. And it's crazy how fast it keeps growing, but it demands more power, right?
Yep, more power, more chips. I mean,
how many things are you plugging in at night to charge that they're ready to go in the morning? I got an Apple Watch, an Apple phone, and my laptop, and my iPad,
AirPods.
Everything. Everything's getting plugged in at night, so I'm ready to go in the morning.
Yeah. What do you think about Actually, this is probably a good closer. What do you think about, this idea is kind of spurred by Intel. What do you think about the way that the government suddenly has taken a stake in a United States tech company, and it's Nvidia subsequently followed up with an investment, in actually the stock. But how do you feel about the government investing in companies?
That's a sticky situation to me that I don't really like. I mean, we have, NVIDIA giving a percentage of their company to the federal government. We have the federal government getting involved in TikTok, and driving where that's going to go. And I don't know. I understand the security, I guess, aspect of TikTok and the data mining that they might be doing, and where, I mean, let's face it, there's wars being fought all over the world right now, and there's no soldiers don't have to go in as much as they were. There's drones doing it. Somebody's sitting in an office building flying a drone and to bomb something. I mean, it's crazy where it's going. But for the government to be involved that way, I personally don't like it.
It kind of it
I'll be
teeters
careful on
on
what I say, but I don't care for it. It's
yeah. It's an interesting subject. It's kind of, yeah, we say we don't do it, but it's happening.
right.
It's interesting. It's something to be following. I'm interested to see if the U.S. government will take stake in more companies. I wonder if this is going to be a trend or if it's just kind of a few one-off examples. But yeah, something I'm watching. For sure.
I mean, I would have to look more into TikTok to truly understand it. I purposely have avoided trying to understand the ins and outs of that. I get like I said, the data sharing and the personal information sharing being an issue. Outside of that, I really don't feel I'm up enough to make much of a comment on it.
Yeah. Well, I think we've kind of exhausted a lot of subjects, and
Yeah.
I think a good closing remark is that I'm bullish on Apple because they created a burnt orange iPhone and hook 'em horns. I'm super bullish on that. Arch Manning looked pretty good yesterday. I was there. Um, go horns,
Nice.
and
Nice.
the mascot is a steer, not a bull, unfortunately. But it's kind of the same thing, pretty much, I guess. But yeah, hook 'em horns. And I guess I'm bullish on Apple too. Maybe Apple AI, or what do they call it? Apple Intelligence is going to come out soon. But Mike, I hope you have a great week, man.
There is one. Hang on here, 1 second. Let me see if I can do this without screwing up everything. No, not that.
Are you pulling up a photo that you made on the Google Banana app?
I would just like to share this for any of
Oh
you
my goodness!
poor Dallas Cowboy fans out there. The Bears finally won a game.
If for those listening, this is a picture of a large bear with three scared Dallas Cowboys running at Soldier Field, and that is funny.
It was a nice win for us today. We needed it.
Congratulations!
Thank you.
Your coach definitely got one right there.
Yeah. But yeah, guys, any questions, again, follow us on Beyond the Trade Pod on X, my profile, Adam's profile, anywhere. Just questions you'd like us to look into, answer, whatever. We'd be happy to do it. I don't know. We'll maybe have some guests on here soon, next week or
Hopefully.
two. And yeah, we'd like to get your participation. But then again, definitely subscribe to the YouTube channel. Subscribe to us on X, and the more followers we get, the more excited we get, the more content we're wanting to put out.
Exactly, and we're hoping to do some giveaways. ideally some one-on-one sessions, 2-on-1, I guess, sessions where we'll hop into Google Meets with you and talk about whatever you want to talk about. So follow Beyond the Trades profile on Twitter, X, and that's where the giveaways will originate. So make sure you're tuned in. But thank you for stopping by. Hope you enjoyed this episode, and we're looking forward to next week. Mike, have a good one, man.
Right on. You too, buddy. We'll put those links in the description when we upload that we talked about, FinViz and all that. All right. Thanks, guys.
Good night, man.
Good night.